it's nice to, again, you know what? It's nice to see not
normal attire.
Muted earth tones sitting in the chair next to me of varying degrees of mustard and beige. So the blue and black are bold. We both went with the swag.
Yeah, I mean, you got to represent.
You got to represent.
Yeah, sorry, I can start wearing hats if you'd prefer. Cool jazz hats.
Again, I think
that would make you more comfortable.
That's
here.
kind of
that's
soothing
kind of for you.
I mean, I would call it public, but that's just me. So
yeah, no, that's we don't want to do that. But
we don't. So how late did you make it up last night? Did you watch?
Not too late. Was watching. Probably around 10. I decided to call it. Make my own calls.
It seems like the market did too.
Yeah,
it was right around 8:45, 9 o'clock that basically the prediction markets went to 3 and 97,
Crazy.
and the U.S. markets actually took off. So we saw equities on a tear. NASDAQ's up, I think, over 2%. Russell, small caps, 1 point up 7%, and came off a little bit. But so U.S. equities on a rip. The dollar is back in a big way. Huge play down in euro, back to levels we haven't seen. This is for the dollar index, yearly highs. So we've seen actually commodity currencies a little bit different animal.
Yeah.
Aussie's down a little bit, but nowhere near the euro at 190 points. So it seems the outcome is pretty certain. I think Trump is both ahead in actual votes as well as electoral votes, which I don't think anybody called out of the box.
I know, the popular vote.
Yeah, the popular vote. And Senate seems to be locked on the Republican side. They're talking the House races aren't decided yet, but it seems like we may have Republican. So it's going to create, it'll be interesting to see. So we've seen interest rates, bonds and notes lower. We're back to, where are we through? Bonds are, again, 115.5, notes below 110. So we're seeing interest rates higher across the board. The initial thinking is that cutting taxes and some of the policies are going to be put a little bit of weight on borrowing.
Yeah.
And the market's playing through that a little bit. But
did you expect to know now?
I did not.
Yeah.
I honestly did. Part of me thought no.
Yeah.
Part of me thought it would be closer than it was. And it from the minute the polls closed, and I think we got that first snapshot at 7 o'clock for those East Coast markets, then the bulk of the stuff that closed at 8. Once they started to publish some of those results, and whatever you think about mail-in voting or early voting and stuff, it seems like they've really got this figured out well. And now, granted, if Trump lost, maybe there was behind it would be a different, I think, ethos about it.
Right.
And I'm not making a judgment here, but I think the ability to get that vote out early for whatever outcome you were hoping for or not was great. We got a little bit of certainty. I didn't think we'd see this. I mean, everybody was, I guess, and everybody lays the foundation, expect it Thursday. That way, if I can deliver it Wednesday morning or Tuesday night, I look like a rock star. So no different than anywhere else. But no, I didn't expect it would be as apparent as it is.
Yeah, even getting from like 75% reported to 100, I thought that, the reporting timeline, that would tick slower and slower. But yeah, especially in those battleground states, they were able to make decisions pretty early on, even last night.
And from everything they've seen, it wasn't that close.
Yeah.
So it'll be interesting to see play through. So we've got equities on a tear. We just saw a little bit of sell-off. Now, again, a sell-off in, Russell's up 138 points. So a 20-point sell-off, well, on any day we'd look like that's a pretty big sell-off.
Right.
That was kind of a rounding error on a huge move. But currencies continue. The dollar is definitely coming back in a big way. We see this play through the usual suspects. We'll go to peso and talk about that. But let's start where we've seen a little bit more muted reaction, which is in Aussie dollar. And take a look at, this I'm a little surprised about is, again, this is a dollar story. So if you look at it, euro down, euro's down 240 pips.
Yeah.
But Aussie's off 80 pips here, I think, approximately 75, 80 pips. So not taking the same beating as some of the other currency pairs.
And really getting a bid tone around that London Open.
Yeah, a little bit of buying. Now, this one was, this and Kiwi were the most beat up currencies, so maybe they're not getting quite as beat up right now. doesn't quite make sense if you tie this back into the macro play. Gold's down a bunch. If tariffs come in place, it's going to have an impact on the Chinese economy. So,
do we think it's more of a risk on this currency pair can take that kind of nature as well? Do we think with equities moving higher?
I think you're spot on, and I think that is, again, we know there's a correlation to gold. We know there's a correlation to things like FXI and Chinese markets in general in the Aussie. Depends on the day and depends on what the market decides to pick. And all we're doing is kind of assigning a reason, which is, again, we need to be, the fact that we're running through a Rolodex of reasons, we need to be a little bit mindful of. But when we look at some of these other charts, we're going to see a very different chart here because this is held in.
Yeah.
Again, the most beat up recently, but
still
that risk on tone a little bit is playing through Aussie a little bit, I think. So we're seeing that. Now, as a relative value trader, you look at that and you think, okay, is this the one I want to buy? Or let's go over and take a look at Euro. Because, Euro is clearly...
Yeah, here it's a 15-minute chart.
Right. And if we go out to the daily, we're now...
Wow.
Yeah.
Yeah.
So this has been, again, a little bit bigger of a bounce off those lows pre-election. But we're going into the early U.S. time with it sitting on its lows right now. So...
yeah, now in the 106 handle.
Right.
Hasn't gotten below that all the way back to 2023.
Right.
So yeah, I didn't see it. You see common trends, similar patterns among these dollar pairs, but I didn't expect. I knew we were around the July lows, but yeah, all the way back to June now in this Euro.
So, from the highs 112 back down to 107, it's 5 big figures. It's almost a 4% move, 4.5% move in that matter of time. That's a big percentage move in currencies over a period of time. So we're going to, you're right. So this is going back to levels we haven't seen in a couple of years. Dollar strength is really on its here right here. So if you're, depending on what you're looking at, and this is an interesting dynamic, is this is structurally the market's done the most damage to Euro right now. So the guys holding Euro longs are kind of being put to the test. Aussie has, it's, do you buy the weakest, do you buy the thing that's moved the most if you're somebody looking for extremes, or do you wait a little bit that you haven't seen really any two-way action? Let's go ahead back to an intraday chart on that. We haven't seen really any two-way action in this at all. A little bit of back and forth around 107.5. But definitely, as we came in early this morning, U.S. traders started about 5, 6 in the morning, start picking it up. More selling taking place right now. So depends on where you want to. On a pure extreme basis, if you're that contrarian, it's a tempting low. But I also look at what's holding in a little bit better.
Yeah.
Now, so the question is, does Aussie catch up to this? In other words, does Aussie have a leg lower? Or is Aussie going to be, if it does dip a little bit, this is the better performing currency out of the group. If I want to be short dollars, I'd almost rather be long Aussie because it is, for whatever set of reasons, whether it happens to be risk on or whatever, just from a tape aspect, this is the one you might want to be the contrarian. And you say, well, I'm buying an 80-point dip, not a 280-point dip.
Right.
And that's fair enough. But it depends on what you're looking for in terms. This is exhibiting a little bit more two-way action to it, where Euro still seems like they're cleaning house. Now, at some point, does it become cheap? Sure. Where? I'm not quite sure, because I'm not seeing the fact it's rolling over going into the U.S. session right on the lows is going to make for a little bit of a challenging trade if you're trying to bottom pick in euros a little bit, I think. And again, depends on what you're looking for here. Let's take a look at dollar yen. Yeah. Are we back to those levels we saw with interest rates at levels? Last time we were there, we were at 162 with interest rates where they are right now. We're not there yet. Now, we've had a good move in the yen. Yen is, but that yen move is about half of what the euro move is.
Right.
So,
and yeah, this is an interesting one because when you look back to where it was when it was last at these levels, we don't really have a trading range here like we do the euro. I mean,
it's sloppy.
Yeah,
and that's what I
all the yen story.
Yeah, and I refer to this a little bit as kind of a sloppy range because we're in the middle of the range. In other words, if you want to be a seller up here, you always you want to kind of lay out, okay, I think they're high and they're going to come back. So this is where I cover them. You always want to think about, okay, when I'm wrong,
Right.
where am I going to cover these? And when you look back at this, it's like, well, it's kind of a sloppy range up to 160, and that may be make for a little bit more challenging decision making around where you manage if you were to play the contrarian here.
And this one especially, really easy to put a storyline around these and
Right.
say, well, last time, we had this set of circumstances, and this time it's different, when that can be a dangerous game to play as well.
And I think what this is saying a little bit is the Fed still going to cut rates Thursday? Yeah. I don't think, I would bet if we looked at the Fed watch tool, it's moved in probably a little bit because bonds are lower. Don't bother. Yeah. But I don't think they've taken that. Again, tomorrow we get that announcement at 1 o'clock in the afternoon and the press conference at 1:30. And I think that Japan's not doing anything with their rates. Just keep coming in. It'll be a little bit harder for the yen to continue to rally. So that's why we're seeing the yen, dollar strength, yen weakness. Yes. To the same degree as euro? Absolutely not.
Yeah, and I was curious to ask you around the timing of these moves, how much longer do you think it'll go on? Just because a lot of these currency markets may be a step removed, but interest rates, bonds, all of these Trump trades, these proxy trades that people were getting into pre-election,
right.
Just as kind of a way to trade what they thought would happen. Is that the new normal, or do we see that?
When do they get taken? Well, the guys who put them on, who were, again, if you were short bonds and long equities and long the dollar, you're looking pretty good right now. And what we've seen is little bouts of profit taking. We saw the euro hold at 107, back up to 107. There was some people scooping a little bit off the table, probably some guys picking a little bit of bottom. The guys picking the bottom are now being challenged a little bit.
Yeah, especially right around this 154 here.
Same thing here. So what we've done is we've seen that area of congestion. Some guys taking profits. Some guys may be leaning into this who are the contrarian. Now the contrarians are being put to the test as we roll into the U.S. session. I think we're going to continue to see interesting two-way action. If the bonds, which are kind of just bumping along the bottom of their range right now, if we get clear down to 115 and through that, I wouldn't be surprised if we see another leg higher in the dollar. So that will kind of be a little bit of what I would be watching for if I was looking at this. For me, again, I'm not a momentum trader. For me to say that here, any dollar yen shorts are being challenged right now. A momentum guy would be say this is where I step in and start to buy them because as they get challenged, the market's going to go up. And that could very well be the case, and we could see 156 by the end of the day. We don't know, but it depends on your trading style. I'm not necessarily a guy that will buy a 150-point up move and see that continue. So you've got to be a little bit balanced as to what you're doing. I think the key thing here is the moves have been big, but pretty orderly, which is great. So that means there's been liquidity for us to get in and out of. You've got to set expectations on both sides as you whatever you want to do here. If you're going to trade momentum here, you're going to have to figure out, okay, if it actually holds this level, where am I going to cut those out? And if you're going to fade this move as the contrarian, you want to think, where's a reasonable point for me to do that? And because we are, in this example, in a sloppy range, I would be a little bit more inclined to just use a points-based approach. Now, you have some scalping ranges for us.
I do. I don't know how relevant they are now, but if we could switch to the slides, we've got expected moves that I calculated yesterday.
Okay.
And but that's yesterday at the close.
But that's great. And we'll walk through why. Because this is, again, going back, how many days did you use?
Used 30 days.
Perfect.
So we've seen that come in a fair bit, and now, blowing out all of these ranges right now. But when we think about how long this will play out, when we get back to a normal, when we test these new trading ranges, how much will we move back or in a new direction? We've got that middle column there is the daily one standard deviation move based on the past 30 days. Okay,
so tasty traders know all about a one standard deviation move. But those of you who don't, walk through why we look at a one standard deviation move as the science behind it, so to speak.
Yeah, so when you're talking about a normal distribution, a one standard deviation move will give you the middle 68%, give or take, probability that you will see moves on a daily change basis within that range. So while it certainly can be 32%. Outside that move, it tails off pretty quickly. So a lot of the observation you'll see are within that 68%. And so you can use these numbers, the plus or minus, as loose guide rails around what a daily trading session would look like.
There you go. The perfect statistical. This is what a Northwestern education gets you guys. No, perfect.
Still paying for it. Every word.
Perfect walkthrough. And so you think, okay, well, 26 points in euro. We knew we were in an incredibly congested range. Sterling 40 points, yen a little, and we actually came in from 90. I think the last time we looked at it was 99 pips. It's into 84. The challenge here is, okay, what do I do with that? We're through all these ranges. Right, this is the example of, that's why they only hold 68% of the time. Can you look at a 2 standard deviation move, which gives you a confidence interval of 95% of the time? Absolutely here. But practically, what you want to do now is think about, okay, the market had its move on the news. How do I put this into perspective around using this? You don't look at net. Usually we look at net change. In this instance, I take the move as the move and then think about, okay, we're in a higher volatility bubble right now today because we're going to either, again, the dollar will either continue to rally or it won't. We don't know. But I would kind of, as just a ballpark, is start from where we are right now, or that 107.5 level in euro as an example. Double the range because we're definitely in a higher volatile. So how do I use this expected move? Double that 26 out to 52 points, and that becomes your P&L range for the day. It's one way to do it. You guys can do it anyway. You can add triple to it and do it. But trying to say that, well, none of these are tradable now because we're already 200 and some handles, we are. But how do we think about, we had the move on the binary event, on the election outcome. Okay, how do I scalp and put metrics around that? This is one way to do it. So client sentiment you had from yesterday, we looked at this and it was surprisingly, it was long euro and it actually, we went to right around 50-50 on that. So we're going to run through that real quickly as we have a couple of minutes. But so taking these ranges, the one takeaway is that we've had a huge outsized move. We'll continue a little bit to normalize here a little bit. I expect the move from this morning to not necessarily, it could continue, the dollar's strength could continue, but trying to put some context around scalpable ranges, you take this number as a ballpark, you can double from where you're starting and use that as your scalping range. It makes for a little bit wider, gives you a little bit more elastic move, but the idea is not to think that, well, everything has to have a 280 point tail to it. You've got to kind of put practical application around it, and that's one way to do it here. But let's jump back to the platform and take a look really at where we are. Are we seeing traders reposition themselves at all overnight given these moves? So let's take a look at the euro number.
60% long.
Okay, so we've seen a market that was pretty fairly balanced going into it. What this is telling you is some traders are leaning a little bit on the longer side. Let's take a look at dollar yen.
This is interesting.
This is interesting. So hasn't moved as much. We saw the same number yesterday. So we're seeing that a little bit of the same momentum trade playing through this. Let's jump over really quickly to our election trade, Mexican peso, before we run out of time.
There you go.
All right. So
giving back a little bit.
Giving back a little bit. And this will be an interesting one to watch. Peso, we talked about, straddled that 20 level. Traded above it briefly yesterday, came right back, settled almost right on it. The minute the results came clear, again, this sensitive to two things, the carry trade and the tariff issue.
Right.
So this playing through on its highs here. This will be an interesting one to watch because from a daily standpoint, we've had a huge up move in dollar peso. Will it continue? Now, on the sentiment side, we'll take a look at. Okay, traders still, now that long bet has been pared back a little bit from yesterday, right, but traders still leaning on this as a carry trade proxy. Also getting a little bit of lift from the tariffs. So a lot of movement here. It will be interesting to see how this one shakes out. Do we see 21 or do we see the profit taking a little bit later in the day?
And especially in this one because a lot of these more major pairs, we can tend to see historical ranges. Right. This one, I mean, a lot of the recent action, a lot lower in favor of the peso, but not surprising that we've seen even in the past 4 years, price is a lot higher. So definitely a historic precedent for two-way action.
Absolutely, and we got it there yesterday. We'll have it here today. I think we got the follow through on the election results. Now let's see if it sticks, and that will be an interesting thing. I think the next 3 days, we've got today, we've got Thursday, we've got Friday, we've got the Fed announcement, BOE announcement. There's lots of interesting stuff to come back. Give yourself a little bit more elasticity in your trading ranges. And I think you're going to see some really interesting two-way opportunities. So, guys, we're going to wrap it up there. Glenn.
Oh, my gosh.
I know, that was unforgivable. Glenn, and we'll see you back here tomorrow.
Thanks,
Have a
guys.
great day.